which way do prices go with these hopes now of some sort of peace deal, and especially with the new developments around the Chinese lockdowns, which have pressured prices?
I think we all got to hope that the peace talks do go somewhere, and that is going to have an effect on oil prices, definitely, Sarah. I think in the short run, with the market's concerned about further coronavirus impact in China, and also the impact themselves that high oil prices are having. But if you think of those impacts as being in a few 100,000 barrels a day, the market's still got to get past the fact that you've probably taken somewhere between 2 and 4 million barrels a day of Russian oil exports off the market. And that's a pretty big chunk of missing supply to cope with.
So, Chris, ultimately, what do you do with these stocks, which have had already such a strong run-up? If the environment still looks pretty bullish for the companies, the U.S. now asking these producers to get back into production mode.
But you're still looking at a pretty constructive oil price scenario, because you're looking at stocks of both oil and also refined product that are still pretty tight. If you're looking at the refined product market, it's quite clear that the gasoline and diesel prices are going to stay elevated for some period of time. And you're looking at refining margins that are going to probably stay elevated, maybe for a period of time, certainly into next year. And that's going to be quite, positive for a whole swathe of stocks, particularly if those prices and those refining margins can hold.
Yeah, what does it do for earnings expectations in the group? And where do you see the biggest dislocations with the prices there?
Well, I think you see, focus on things like the refining margins, because I think the market's missing the fact that refining margins, for example, are going to be quite elevated versus crude benchmarks. And I think the market is quite fixated on where the oil price, the Brent benchmark is, whereas actually there's an awful lot of trading around that at the moment, and Brent is less of a benchmark for the global oil industry than it's been for probably as long as I've been an analyst, 20 years. And that's because you're seeing this big dislocation in global trade, and you're seeing some countries being able to buy cheap Russian crude and benefit from that. And obviously China and India are two good examples of that, as they're still keeping their trade with Russia going.
Chris Wheaton, thank you very much.